So first bar of the day, again, it was a huge bear bar closing near its low. Okay, now deep pullback, almost 75% of the entire bear bars range or 80% of it is retraced. Big down, big up is trading range price action. So when you get a inside bar on the fourth bar, it's unlikely to go in your favor. Now when we do back testing of maybe not because of you guys are not into MPB and scalp trades, maybe not those drills, but there will be few other drills which is important for you to understand which is a strong breakout and which breakout leg is the strongest out of all. So those drills you will have to do. When you do that, you'll understand when the pullback has reached more than 50%, even if it's a single bar breakout. This you can consider as a single bar breakout, right? The bear bar. So when that happens, this will be your entire breakout or spikes range, the high to low. Now this is more than 50%. Obviously, you can give room up to 60% pullback, but this is way more than that. So when that happens, usually more often than not, you will only get a break-even exit and not a swing down or a scalp down. So it's better not to take those
And
trades.
that is also happening at a moving average.
Yeah, if you see it retrace back to the moving average and more
Will that give any?
on the opening, more
Uh,
often than not, if it's not a huge gap up or a huge gap down, or even if it's a decent enough gap up or a gap down. Sorry, is the background noise coming?
is,
Okay, if it's
is there any
audible,
disturbance from my side?
no, no, no. I'm asking if you are getting from my side. Somebody is gardening.
All right.
Okay, then I'll continue. So where was I? Yeah, if it's not a gap up or a gap down, even a decent enough gap up or a gap down, usually it will be a opening range for at least 8 bars. Why I say 8 bars is at times it can extend up to 15 bars, 20 bars. I'm not saying no, but more or less, if you ignore the first 8 bars and then see what's happening post those 8 bars, it will be much easier for you to understand how EMA is also interacting with the price. If it's already a gap up or a gap down, and if it's a huge gap up or a gap down, and you wait for it to retrace to the EMA, whatever manner it may be, either a double bottom, wedge bottom test of EMA, and then a micro double bottom, whatever it may be, or if it just goes into a tight trading range or a tight or somewhat not a huge trading range but a compact trading range, and then EMA catches up to the price. All those things can happen, right? So once it's interacting with the EMA and it's been more than 8 bars at least from the open, you'll get a clearer picture. Okay, so now deeper pullback, inside bar, not a great trade. Even on the index chart, if you see, the pullback is much deeper, and in fact, this bar is also a significant trend bar. This is okay, decent bar, not a significant trend bar, but yeah, you get the point. Also, I didn't take any trade today. I missed one trade. This is the exit of my swing position, so ignore that. Now, spike one, spike two. If you observe, this is where the momentum is starting from for the spike two leg or the whatever you want to call it. The first 3 bars are uh, not significant trend bars. They are not even insignificant trend bars. They are just trading range sort of bars. Now, post that, you are getting a bare significant trend bar. So I'll be counting the MPB from here, right? Because whatever happens before that, I'm ignoring it. I'm just saying that, okay, for some reason, this is where the momentum is starting from for the spike 2. So this will be MPB1 and MPB1 breakout. If I'm not confident to take this MPB1, I would be taking this MPB1 breakout. Now, if I take this MPB pullback setup, is it okay to swing it? I would say okay, you can swing it, but keep in mind that the spike itself is not very strong and it's a decent spike. not a strong one. So maybe exit at 2 hour. That would be better. I think it went in. Okay, it went to 3 hours. Okay, now what's happening? Those who bought this breakout, they got a gap on the futures chart, and you can see there is no, wick also. So this is not a pseudo gap. It's actually a gap. That also, when we come to the breakout lines, I'll explain how that adds to the strength. And you can see limit orders getting filled in that gap. And if you say this is where the spike is starting from, somewhere here, the 40 to 60% region on a limit orders will be placed. If they are getting in, again, they got their leg down. Wedge test of EMA, not test of EMA, but it's going close to the EMA. This is the first push down. I would have liked it to give you another push up and then a down.
As there
Maybe.
is an inside candle over there, can't we take it as L2?
You mean inside
Can you
candle? This
explain?
one. Thing
Yeah.
is,
Yeah.
uh,
Even the inside candle has to be a trend bar.
no. That is not necessary. The issue with the wedge flag in either bear spike or a bull spike is that more often than not it is fizzling out into a trading range unless and until it gives you a proper structure like this. So this is the wedge test of some EMA or going close to EMA. You get a leg, small L1 and then a retest and a L2. This structure is more, you know, it works better than the wedge and L1 itself. Even if it has an inside bar, that's fine. You can say it's a second entry, and those who take L1 or H1 trades in a PIB, maybe it will come under their system. But for me, from what I have backtested, at least it's better to wait for a H2 or a L2 with a W pattern or an M pattern. Before, when I
Ah,
started trading, and I used to understand a little bit of Elbrooks back then, and when I started, I used to think, okay, the more complex the structure is, the more traders will get trapped because they are not seeing it, and I am able to see it, and it will work. Later on, okay, I realized it doesn't matter if you are able to see or not. It matters what the market is doing more than what you feel is right. So that took,
I know in one of the videos you have said that if an inside candle is there, we can consider it as an
yeah,
even if it is an L2 L1 entry, we can take it as L2 entry, right?
yeah, that depends on the structure, not in this structure. And also, the inside bar works for reversal. Okay, this is a continuation pattern. When I'm talking about wedge
Okay.
flag, you're seeing a bear
Mm,
trend, a bear wedge flag, and a continuation downwards. If you're
mm,
purely looking at reversals, you get an inside bar that will act more like a trade, second entry better than this. You can take this trade. I'm not
oh,
saying no, but it's just that proper double micro double top or a proper micro double bottom where you're getting an H2 or a L2, those structures are much better to trade.
okay.
If at all you want to take this trade, wait for a breakout and a follow through. That okay. When we do the drills, yesterday I gave you an assignment. After that, or maybe today at the end of the session, I'll explain you what the next addition to the drills will be. Then you'll be able to, recognize you won't usually get a breakout and a follow through unless there is a H2, but or a L2 structure. In this case, you are waiting for a L2 structure. But when you do get that, even without an H2 or a L2, it usually tends to go continue the trend.
Okay.
Now what's happening? Spike one, spike two. I, I wouldn't categorize it as anything but a pullback structure, just a volatile kind of a structure. You got your spike three. Spike three has MPB1, MPB2, MPB3 now. Good bull significant trend bar. Now, again, if you buy this bar's closing or buy one tick above this bull bar's high, you are exiting for a scalp. So now, if you bought it for a scalp, immediately you're getting a disappointment bar, then a follow through bar. then again a leg up. So this is leg one, pullback, leg two, or whatever you're hoping for. You got two legs as a scalper, so you should be getting out. Now what's happening? You're getting a spike four. It's not a strong spike. We are late into the trend. More than 15 bars have passed without the test of PMA. It is not behaving parabolically. It's just that EMA and price have not been interacting. Also, climatic wedge bottom because of this three PIVs last. Again, a spike down. Now, if you join the last three spikes, PIVs, then again a climatic wedge bottom. Not a good signal bar. I don't know if it was a good signal bar on the index. Okay, on the index, it is a good signal bar. But then you're getting an inside bar following this bar, bull bar. If at all you have enough experience, you can go long one tick above this bar side, put your stop loss here, and then scalp. But at the initial stages, at least, this is not a trade for you. Those who bought that inside bar side, they are getting a scalp. Here, this is not a significant, bar, so I wouldn't be taking the trade. Also, when you backtest, if you notice, whenever there is a significant trend bar on the Nifty index, and there isn't any significant trend bar on the Nifty futures, it more often than works. When there is a significant trend bar on the futures chart but not on an index chart, it's like 10% more times it will fail often than not. So it's not like a huge difference, but Nifty 50 chart in terms of significant trend bar is more reliable. And also volumes of futures chart have been decreasing consistently because of all the charges. Can't help it. That's why you see such huge gaps and huge wick centers, no proper closing. This is increasing day by day. Okay, now again a wedge test. You're getting a okay. Now also, if you see, you're getting a bear breakout and a follow through. I said it will have a continuation. It is not a certainty. And why do I ignore this L1? It's better to wait for an L2 because that structure is more reliable. Here also you're getting a wedge test of PMA, right? Wedge flag, wedge bear flag, and L1. And you've also got a breakout bar and a follow through bar. This was a small leg down, not a continuation for the swing. So keep that in mind. Okay, this was the last PIV, and more than 15 bars have passed, and I would call this a trading range. Why? If you're ignoring the fact that this is a volatile bigger, okay, decent enough down, bigger, and again a correction, it is already behaving like a trading range. If you are still not, able to recognize that it is a trading range, this is where the PIV started from. This is more than 15 to 20 bars, so keep that in mind. Okay, now I was waiting till here somewhere. Then I went, I texted you guys, I guess, and then I went to have my lunch. I was seeing, okay, how many setups do we get in this week? Monday I couldn't trade, and yesterday also I couldn't trade. Monday, if you see, we got a failed L2 here. Sorry, failed H2 trade here. That would have been a break-even exit. If you didn't exit on this bar, that would have been a break-even exit somewhere here. And you got a decent enough L2 here. This is not a great setup. Volatility is there, but on the index chart, that was a good L2. This signal bar and then continuation downwards. Apart from that, there is one failed, L2 here. Okay, maybe break-even stop loss would have been hit if you entered here, and once the price hits 2R, it will again come and hit your break-even stop loss. Here, no such thing. Maybe the MPB trade and MPB one breakout which you took here can work. 3-bar micro channel, again an MPB that would work. Wedge, climatic wedge, and then you got a smaller nested wedge within this larger wedge. So that again increases your good signal bar on the index, but not on the futures chart. Again, an inside bar, if you want to ignore it, you can. Trading range behavior, nothing much to do. Again, you got a failed. Okay, what are you hoping to get here? When I said it will be a wedge test of the EMA, you're hoping it will go down, come up, and then give you one more, significant trend bar on the downside for a M kind of a pattern or a micro double top kind of a pattern. But instead, what you're getting is a W kind of a pattern, right? Which usually happens in a bull spike and then a pullback. So this is a failed L2 structure again. This trade was very good and yeah, I missed it. On index, on the futures chart, sorry, on the options, it would have given me at least 6 hour or 7 hour IS here. So that would have been a good week. Okay, not to regret anything, but just saying. Strong reversal up, MPP1 entry if you don't want to take that because this is okay. Now, when we do the back testing or even the drills for the breakout leg, when the breakout leg 1 and breakout leg 2 are very, let's say breakout leg 1 was 10 points, and all of a sudden in the breakout leg 2, you're getting 20 points or more. That can act like a climatic breakout climax than a breakout. So this could be a climax. So I would not take this NPV trade actually. If you say, okay, we are in a trading range and a breakout and then a retest, that strategy, those have, backtested for them, it might be different. Not saying no. But for a swing trader, if you go caught in here and you saw this happening on the option chart, if you're sitting comfortably with 4 hour, 5 hour, or 6 hour profits, whatever it may be, once you get a bear bar and on the following bar, and then the next bar goes below its zone, that is when you can get out. Why? Because you're already sitting on huge profit. If you don't want to, if you think that okay, this is a huge breakout and it will give you one more leg up, maybe you're hoping for that. I have never made more than 6 hour or 6.5 hour on a single trade in an options intraday swing trade. It's really hard to hold it for. At times you will get 10 hour, 15 hour, 20 hour. I'll just let it go because I know I know I cannot capture it. It's just mentally too taxing, and you'll always regret. And at times when you even get out of your swing positions on a stock, there is nothing wrong with it, but you still get out because you have on stocks. Yeah, it's easy to capture 10 hour, 15 hour because you have all day long to take a decision. At times you will have weeks time to take decisions, but on a 5 minute time frame chart, it's really hard. You're getting a breakout and a follow through again, not a breakout and a follow through here. If you say this is a decent enough bar, you can say it's a 2 bar micro channel and then a continuation upward. So any doubts here on the day? I didn't explain any scalp trade, but I hope you if you want me to explain, I'll explain, but since you guys don't want to trade it, I don't know if it's important or not. So you guys tell me if you want those scalp trades also. Usually I mention climatic wedge and parabolic wedges scalp because they are easy to identify and you don't have to, worry much about the limit. First of all, you have to define yourself as what kind of a trader you want to be, because even if you're a scalper, most traders will not be comfortable taking limit order entries, because when they're getting on a limit order, that means that there is a micro pullback or a pullback, whatever it may be. If you get a breakout leg and you're scalping and you're placing a limit order, you're obviously hoping for some sort of a implied pullback, micro pullback, pullback, whatever it may be. So that is already betting against what you want to do. If at all, breakout leg is to continue lower, I asked you to mark the MPB's pullback depth, right, of the breakout leg and how much of its breakout leg's range is getting retraced, right? When you see that happening again and again, when it's retracing more than 70-75% of the range, it usually tends to go into a trading range. And it is really hard to scalp with limit orders, because what you are hoping with a limit order is it will fill your order and it will immediately give you at least a minimum follow through. If it's a bull breakout leg and you entered on a limit order, what you're hoping for that bar to be when it closes is for a bull body, a minimum bull body, whatever it may be. It need not be a significant trend bar or anything. But when you don't get that, and instead you get a bear body, and even worse, if you get a bear significant trend bar, you'll have to scale in again lower and then try to get out break even or with a smaller profit. So if you're entering on a limit order and you don't know where to scale in, how to manage your positions, it will be really hard. I told MPB pullback or MPB breakouts setups or systems are also you can swing certain setups, you can only scalp certain setups. Those are will as we progress you will also know. But those entries are on stock market entries, and in our markets you can say stop limit entries. There are no stock market orders. That's the only issue. Or you will enter on the market. You will be waiting for the order to the market to go one tick below this bar slow, and you quickly hit a buy button or whatever you are doing. If you are trading futures or options, it's up to you, and you click that button immediately. But then if you do that, keep in mind that if the server issue is there, let's say you place the order at 1 minute 10 seconds, there will be probably delay of 50 milliseconds, or maybe at 1 second also at times. So keep that in mind. You will get a bad fill. If you say, okay, there is obviously going to be some sort of a pullback within the bar itself, and then it will hit the this levels again on the options chart. Maybe once it goes below this bar low, you can place a limit order. That also works. That limit order is just because you are trying to get a better fill on your entry. It's not a limit order reading system per se. So that is fine. You don't have to worry about anything because okay, if you say this bar's range is similar to a significant trend bars range and you place your stop loss here, all good. If you say okay, this is not as huge as a significant trend bar in the recent times at least, then you'll place it above the recent or the last significant trend bar sign. Since this is the breakout of for bears, we will be looking at the high pivot. From there, depending upon where you are, you can swing or scalp. Since this is a decent leg, it's better to scalp out. Okay, I've obviously given you examples in the later part of the class where you can see which is a strong trend and when to swing and when not to swing. 3 bar micro channel, deep pullback. If you get an NPB, it's still fine to swing. Why? Because because of this 3 bar micro channel, there is obviously an open gap. All those things add to the strength of a breakout line. Here you're getting okay. This is not a significant trend bar. This again not a significant trend bar. NPB bar. If you say these two are decent enough bars, and you say this is one significant trend bar, okay, I'm okay with that too. I'm not saying no. Again, MPB one. If you say this is one, both acting as one breakout, then this will be MPB one, MPB two, and again MPB three. You got a breakout and follow through on the last MPB after MPB two. So keep that in mind. Once you get an MPB three, even if you take this trade, once you get an MPB three, be quick to exit if you're scalping. Kova micro channel might be climatic, can't say. Maybe it's better to wait for a H2. I wouldn't have taken this MPB. So no doubt here, right? Okay. So if you guys can send okay, I've already sent. Some sort of a double bottom if you consider what's happening yesterday. But if you ignore that and then still look at what's happening today, okay. You guys are considering what's happening yesterday, right? I'm not saying it's wrong. I'm just asking if you guys are following that system.
Yeah, I have this tendency of drawing the trend lines from
Okay.
yesterday's continuation.
Okay, that's fine.
Before I used to do a lot,
Hmm.
but still I have that habit. I'll see what is at least the trend line. Yesterday, if you see,
Hmm.
it was the trend line which was index. Today also, even today, from yesterday's trend line, the first impulse was stop at the yesterday's trend line, and it went to the high and again came down.
Okay, you mean somewhere here
In
or
the
here?
index, in the index.
Yeah, this is the index.
Yeah, I usually do that, but I don't know is it a correct way or
It's
no.
not wrong or anything. Nothing in
No.
trading is ever wrong. If you follow one thing and you have, good mathematics behind it, it always works.
Even Albrook says that if even when to draw the trend lines while he's teaching trend lines, and
Yeah, yeah, okay.
uh, he'll ask us to draw the lines. If you get a two pullbacks, or draw a line like that.
Yeah, there's one more, strategy which people often use. So this is the trend channel line for this micro channel, bear micro channel, because there is no, for L Brooks, a pullback happens when, okay, this is a bear breakout leg or a spike. So for him, pullback by definition is when you get a bar which goes beyond the high of its previous bar. So this is where pullback happens for L Brooks.
Mm.
Uh, so this is a kind of a tight channel or a micro channel, whatever you want to call it. So if you draw that channel line, and once that line is getting broken out of, uh, you can enter market short orders, or you can buy put calls. Sorry, put options. That works.
Mm. With the SL at the swing high.
Yeah, either the
So
swing
can
high,
you,
or if you see these two bars and you say, okay, if at all trend has to continue, this shouldn't be a climax and it should not go beyond this bar side. That is also fine.
Sumit,
Hmm.
so
Yeah.
in the same example, so in the same chart,
Hmm.
if you can draw a line for the bulls, the pullback,
For this or this?
for the second pullback,
This one.
Yeah, yeah,
Okay. For bulls, you mean this one?
yeah.
Okay. Hmm.
So can we take any decision here with these lines?
On a smaller time frame, it will be like a channel and a breakout of that channel. If you see there is some sort of a climatic wedge and then a break below it, but keep in mind it's better to choose one time frame and then trade it. And on 1 minute time frame, if you're trading on the first 2 or 3 hours, you'll get n number of L2 and H2 trades. Even if you see here, okay, we know that we are still in a trading range, but then okay, decent enough L2, and then you got a L2 breakout. Again, a failed L2 here. L2 signal we got, but more than 30 hours have passed and there is no test of EMA. L2 did not get triggered. Then you're getting a bull significant trend bar. So this is a good trade again. If you say breakout of EMA and then a H2, this is also a good trade, but stop loss got hit and then it headed higher. Break below the EMA, spike 1, pullback, spike 2, again a pullback, constructive L2. This is again a good shot. So depending upon what time frame you're choosing, see, if you choose 1 minute or 2 minute time frame and you trade for more than 2 hours, you won't be able to concentrate better post those 2 hours or 3 hours. It is really, there are too many setups and price is moving too fast and you have to be quick, even if you're taking a swing. But on a 5 minute time frame, the advantage is, let's say you started making money from today and you're profitable, you're a successful trader or whatever, and then in 5 years your lot size has grown too much. Now that 5 minutes can still handle that liquidity issue which you can get on a 1 minute time frame. On a 1 minute time frame, I don't think you can risk more than 5,000, or even 10,000 would be a stretch. But if you want, okay, I'm not saying you shouldn't trade that. Okay, you can do that. You can say whenever there is a breakout of that pullback structure, what you can do is, what I have done is, this is a spike and pullback. This is the compact pullback and a constructive pullback. That's the ideal looking pullback structure. There will be pullbacks like going above the pivot, pause pivot, and then again giving you one more setup. This is okay. This is not ideal, but it's still fine. There can be pullback setups where wedge test happens, and then you get a W pattern. If you give me an option to trade between these two setups and both are happening at the same time between two different assets, I would choose this asset over this asset. Why? Because bulls are showing much more strength in this structure than this structure. So when this structure happens and you're saying there is a breakout of this wedge flag, yeah, you can take that. You can also take a breakout of this structure. That is again a pullback breakout. Even this structure, that will be a pullback breakout. The naming will, the way you name things will change, but whatever it might be, it depends on how you want to, design your system. What we will do when we are designing a system is you will have a basic idea for what you want to backtest. Let's say, for example, I'll choose 2 bar micro channel. Okay. Now I'll go and see how many signals of 2 bar micro channel are there within 1 month to just give me an idea whether my idea is right, whether it's profitable, is it, what things should I let go of, meaning what filters should I add so that those signals I ignore and all everything. So to do that basic test before I actually start backtesting any system, what I'll do is I'll see, okay, what are all the 2 bar micro channels? How many signals are there? How many of those are giving a second leg? Now, post that, if I have, let's say, 100 signals in a month, I'll study all those 100 signals and try to find which are working better, which aren't working. Now, I'll make a group. It's better to take printout, and I'll ask you to do that too. When you take printout and you separate the good signals and the bad signals, how do you know it's a good or a bad signal? By how it's performing, right? So if you're hoping for a 1 hour, you'll see, okay, this went to 1 hour, I'll keep it in a good signal. Then you make rules so that it will filter out most of the bad signals from the good signals. And even in the good signals, there will be easy trades, there will be okay-ish trades, there will be bad trades. Okay, bad trades meaning it will take a lot of time to move in your favor, or the price action is occurring in a manner where you are not able to handle what's happening. Let's say you took this L2 short and you're waiting for a 3 hour. Now maybe it went to 2 hour. Let's say it went to 2 hour and then it's going into trading range. So how do you handle that? Does that account for your system which you are designing? If at all you are scalping, you should be generally most of the time you should be out of the market within 10 bars. That is the maximum leisure you can have as a scalp trader, because if you are scalping and you know that trade is not going to be turned in, it's not acting like it's going to turn into a swing trade, you should be getting out within 10 bars. You're not supposed to hold it for more than 5 bars most of the time, but for some reason if you even extended it, at times it does happen, you hold it for 10 bars but not more than that. So when you define all those rules finally and say the rules should not be like out of nowhere. For example, in a breakout leg, if I'm saying 2 bar micro channel and I get a breakout bar and then again a significant breakout bar, and there is a micro gap between the 2 bars. What is a micro gap? So if you see from this bar's low, from this bar's close, which is here, and this bar's low, I mean, there is a small micro gap, right? At times there can be a gap between the high of this bar and the low of this bar too. At times this gap, I mean, this low will be somewhere here, but there is a gap between the close of the first bar and the open of the second bar. So all those things can act as a micro gap. When that happens, when we do, basic drills, you'll find out that more than 90% of the time, there are odds of, getting one more leg up. 90% of the time, if you are able to, okay, but it doesn't happen always. That is the issue. And it has to occur. The, good context should be there to back it up. If you go and study, okay, I don't know if you have any LF Afshari's free classes, but if you go and look at his classes, what he says is he considers this is a breakout bar and this is also a follow through bar. Even though this bar is not closing beyond the previous bar high, he'll still consider this as a signal bar. That is not wrong. He has designed his system based on his parameters. What I say is I want it to be a micro channel and I want it to close beyond the previous bull bar side. For me, that is also adding, to the probability of success, that it works in your favor. When I said there is a micro gap and the odds are 90%, keep in mind it is earlier in a trend. Earlier in the trend means either it's in spike 1 or spike 2. If it's in spike 1, very good, you're getting, you can probably swing it if you want. The later into the trend, maybe it's already spike 2 has completed, now pullback, and spike 3 you're getting a micro gap. There the odds turn against you. 70% or more of the times it will tend to give you give you a pullback rather than a continuation on this for the second leg up. So based on where you are and what the context is, those things change. Now, why, if even if you don't take this trade, why is this important for you? Yes, I said, okay, this can be climactic. Maybe I'll ignore the NPB1 trade. But if at all I get a constructive H2 trade, now I know, okay, I can still ignore that the fact that this is behaving climactically and assume that there is going to be another leg, because earlier in the trend, this is a micro channel first of all. If you ignore the fact that this did not close up beyond this bar side, on some time frame it is still a micro channel. And there is also an open gap, open micro gap. Also one more gap here from high of this bar to low of this bar. And if the pullback is not deep and it's constructive, why not? Why not take that trade? Just because you are presuming that a significant trend bar can be either a breakout bar or a climatic bar. But based on your system and what context it's showing you, you can change that. So any doubt here? I probably over explained it, but point is,
Yeah,
yeah.
I'm getting the micro gap.
You didn't get the micro gap concept, huh?
No, I got it.
Huh.
So, like, will the retest of the gap work?
Thing is, let's say this is a micro gap, right? And let's say this is the breakout leg from all the way down here to all the way up here. Now, there is again, if at all the pullback is reaching the 75% depth, 70 to 80%, whatever it may be, let's say on average 75% depth, the odds of you getting a leg up reduces significantly. Reduces meaning those who bought here saying that, okay, let's say instead of price heading higher, it headed lower here. And this is a weak sell signal bar for bears. So maybe they entered on a limit order here, maybe they entered on a 50% pullback limit order. Now, if they see this happening, that it fell all the way down here, and that, okay, yeah, gap is open, I'm not saying no, but the fact that this can be a climatic bar is because it is very huge and the gap is also very low, right? So if at all somebody is entering on a limit order here, he has to, back test the odds of success. In trading, see, a system should not be designed in a way for, simplicity of rules alone. Because, okay, you got a signal, you got an entry, those are in your hands. You choose what the signal can be, you choose what the entry can be. But post your entry, whatever happens, it's in market side. Till then, okay, you choose, okay, somebody say this is climatic bull bar, maybe they are shorting. Somebody says, okay, this is a breakout of this pullback structure and breakout above all this, I don't know, 25 or 30 bars. So this is a breakout bar and I'll buy the close. So who is wrong, who is right? Based on their system, it depends. But in general, what I have observed is, be it a breakout leg or a pullback structure's entire spike you're considering, if the pullback reaches more than 70% or below, it's bad when it reaches 60% and below. 60% you can still give your breathing space, but if it's going below it, usually it tends to fizzle out into a trading range. So it's better not to. Let's say this bar closed somewhere here and the high was also somewhere here. Then maybe I have to just show you. Maybe it's closing, its high is somewhere here. Now it's reasonable for me to place a limit order here. So given on the context, you have to change your you know system which you're trading, or if that system is also factoring in all the variations and you're grading it, that is even better.
Okay. The, we have come to this topic now. Then, how about fair value gaps and the order blocks? Have you? I think you know.
Order blocks I don't remember exactly, but fair value gap I remember because it's just a 3 bar micro channel and then a pull back and he's trading in. But then also he never
Yeah.
tells in what context you should be taking it, right?
Yeah.
That is the only issue. Elbrooks's
No, the
thing, yeah,
general consensus is like you have to get a sweep or let's assume double bottom here.
okay.
Then, if you get a fair value gap, that is a valid, strong fair value gap. In the senses of ICT and smart money.
Okay. But here, don't doesn't it mean that okay, if he's saying this is the entire spike and he's only worrying about that, then maybe it comes under 50% to 60% mark, then okay. But I would say, okay, I don't know if he's making money or not, or whether his system works or not. But based on what I've seen, micro channel is or 3 bar breakout is what he says as fair value gap setup, right? Maybe I don't know
Yeah.
what depth of pullback he is talking about. But
So
if
there are some
yeah.
variations. So that is the gist of the fair value.
Mhm. Okay, I
There are
haven't
so many
studied much about
variations.
him. I just saw a few videos because he was, on the rise in that time, and then it became famous
Um,
in India also. So yeah, but I haven't seen every video of his. So it doesn't
yeah,
matter. Yeah,
Abhiroops also talks about this like not in he doesn't say it's fair value gap, but
yeah.
it
He
says
just says
gap.
that it has a open gap or a pseudo gap, and that when you
Mhm.
can get a reasonable entry during those, limit orders getting filled during the closing of those gaps, you can enter a scalp trade and maybe turn into a swing trade.
Mhm.
Yeah. So if you only practice 3 bar micro channels, you'll find that MPB works better. And if you get a weak buy signal bar in a bear spike of 3 bar micro channel, then limit order works better. Problem with the limit order for me is when it's a deep pullback. Okay, let's say I placed a limit order at the 50% pullback region of this bar. Okay, for some reason, because I like if I get a strong surprise breakout bar, either in bull direction or bear direction, I place a limit order in the 50% region. Who is to say that the pullback won't go to 75%? I'm not saying people don't trade that. I know they do that. What they do is, okay, if they are entering on 50% and then price is it's 75% pullback, they'll scale in and exit somewhere at the break even point. I'm not saying no, but for me, especially in Indian markets, to do that on an options chart is very difficult. It's better to enter on a market order, or maybe you're entering on a stop limit order because you don't have a stop market. For me personally, I'm not saying that you shouldn't design a system that way. That's why I told you, based on your psychology and what you think is best for you, first okay, if you say, okay, you're going to trade 3 bar micro channel, I'll tell what should be the features for it, what are you looking for, is okay, what will be the best scenario if you're trading a 3 bar micro channel? The best scenario for you will be when there is no retracement to the open gap, right? Because you're trading in the direction of the trend, and that is screaming to you that I'm the strongest right now. So if you're, let's say you have your strategy, then you say, okay, maybe if I'm taking 1,000 rupees risk, that is 1% of my capital, you will design it in such a way that maybe you will take 330 rupees to 500 rupees risk when the 3 bar micro channel is taking place and you're entering on the close of the third bar. How are you entering? 30% to 50% of your risk you're taking. When it retraces to the, and closes the gap of the micro channel from the bar low of the first bar of the micro channel and the bar high of the third bar, when it retraces to this level, maybe you will say, I'll scale in 70% to 50%, whatever, left of your 1% risk. And then you'll, manage your trade based on that. That also works. So it's not like something is wrong or right. It's always about whether you as a trader can make money using the concepts which you understand better or which you can easily identify. Why the spike for me, the spike theory works for me is because for any trader, even a beginner trader, if I say, okay, this is a trading range, this is where the spike started from, when you're hoping for a pullback and a spike too, if at all he's not comfortable taking a pullback trade, let it go. You're getting a micro pullback trade, you're getting a micro pullback breakout trade, micro pullback breakout trade again here. If you're again seeing 2 bar micro channel, okay, here I wouldn't take this, but it's still okay, reasonable, because I just because it doesn't suit my trading style, it doesn't mean that it doesn't have to suit my students trading style also, right? So this is also okay. This is a good setup actually, because when you go and backtest in a pullback structure, when you get a breakout and a follow through on the downside, you know that it's going to go into a trading range for few bars. But what happens when you're getting a continuation direct, okay, we are talking about a bear spike and you're getting a bear micro channel, 2 bar micro channel. So this adds to the probability, right? That they are showing strength. If 3 bar breakout, you're getting even better. So it doesn't matter how you trade. It's just easy for traders to understand, okay, what's a trading range? What's a micro channel? What's a climatic wedge? What's a parabolic wedge? When to trade, when not to trade will become easier with the spike theory. But the systems can be, catering to their psychology and their interests.